Hey guys, welcome to Full Time Trader, the show where we talk about stock tips, stock news, and stocks to trade. And in this episode, I want to talk about margin trading and why borrowing money is important when you trade. And I want to remind you guys that this is not financial advice, and I'm not a financial advisor. I'm just a full-time trader. That's why the name of the show is Full Time Trader. And if you haven't followed me on Twitter, I highly recommend you guys to follow me on Twitter. I always share my thoughts and the stocks that I buy and sell. And if you like this video, I really appreciate if you leave a thumbs up to help YouTube spread the word.
So what is margin? Margin is using borrowed funds from a broker to trade stocks and other assets. And how does it work? Let's say you have a trading account with $5,000. Most brokers in the US would give you a 1-on-2 long-term margin and a 1-on-4 day trading margin, which means that you can trade stocks with 2 times the amount that you have in your account for long term and 4 times the amount that you have for day trading. So in that case, you would be able to hold $5,000 more and have a $10,000 position with marginable stocks for long term, and you would still be able to place day trades with 4 times the amount you have. So in that case, when you have a $5,000 account, you may place a $20,000 day trade with marginable stocks or hold a $10,000 long-term position and day trade with the remaining $10,000. So why is margin important? When you become a profitable trader, you're going to think about the fact that money makes you money and you need ways to get more money to make more money. That's where margin comes into play. It's like borrowing money when you buy a house with a mortgage. But I can only recommend this to people with proven strategies. So if you're a beginner, I would recommend you to try margin trading only after you're consistently profitable for a long period of time and comfortable with your trading strategy. Once you have that trading confidence, that's when you can take advantage of margin trading and make more money with it. But if you have no trading experience and you don't have a profitable trading strategy, margin could be a way for you to lose all your money faster. So the idea of margin is if you have $5,000 and you trade a stock and make a 100% return in a year, you made $5,000 a year. But if you make the same trade with margin and you trade that stock with $10,000, $5,000 of your account and $5,000 you borrowed from the broker, your return would be $10,000 after a year because you made 100% on the $10,000 position, which is $5,000 of your account and $5,000 that you borrowed from the broker. So instead of making 100%, you made 200% a year. And a simple way to describe it would be if you have a $5,000 account, you can trade with up to $20,000, but you can only lose $5,000 because if you take a $10,000 position and lose 10%, you lost $1,000 and your account goes from $5,000 to $4,000. And I want to remind you guys that this is only with marginable stocks. Obviously, not all stocks are marginable, and some stocks would give you different types of margin, but usually the safer stocks or the stocks with the bigger market caps would give you the better margin. So can you get more margin? Yes. Some offshore brokers offer 1-to-6 margin for day trading, which could be very helpful if you're profitable or a way to lose your money faster. Also, once you have an account with a US broker like TD Ameritrade, Interactive Brokers, eTrade, you can give them a call after a while and ask for more margin, and they might increase your borrowing limit. So the bottom line, what's a good margin trading strategy? Once you become profitable in trading, you can hold your long-term stocks with double your account value. And I recommend to buy those safe stocks for long-term once they dip, and not when they make new highs or when they're close to the highest point. And once they show sell-off signs, to sell what you borrow. And with the rest of your money, you can day trade. It's a great strategy, especially for larger accounts. Once you have $100,000 in your account, you can have a 200,000 position in companies that grow all the time, like Amazon, Apple, PayPal, for the long term, and still day trade with $200,000. A way to really maximize your profit. So yeah, guys, I want to say thank you for watching this video. I hope the video helped. If you like this video, you can actually use the margin trading strategy combined with my stop entry strategy, which I'll leave a link in the description below and also should be on the screen right now. And until the next one, guys, peace out.